little what if here. So I think a lot of traders trade commodities the hard way. You're trying to outmaneuver high frequency traders and hedge funds during the week. That's a losing game. The real edge isn't found in the daily grind, sometimes found on the weekend. The ability to anticipate the Monday morning gap on gold or the reaction to a weather report on the soybeans gives you an opportunity where others can miss. Our service helps unlock that opportunity. I'm going to show you how to trade commodities like a chess player. Actually, not me, Jeff is. But you want to be thinking 2 moves ahead, not like a day trader. You don't want to be chasing every single move. So, with that, guys, that's my opening statement for today with Jeff. He's going to go over the commodities. And honestly, I used to be a pretty big gold trader. And let's take a look at gold this morning and see how it's looking, because I haven't pulled it up in a little while. Let's see. Wow. Gold's up 1% today. Isn't that interesting? Almost like this is the perfect time for Jeff to talk about gold this morning. And if you guys don't know, if you ever looked at soybeans, it's ZS. Soybean futures. And the bean market is a little strange. So it opens at 7:30. So be 8:30 Eastern time. And then it closes at around 1 o'clock. So it's a very quick one there. I'm trying to see, because I use Alex Reid's wave indicator, which he showed you guys earlier this week. And it actually caught a very nice call on it yesterday and this morning as well, which is very impressive. And I'm sure Jeff has a much better way of trading the commodities than I do. This guy, Jeff's been trading for 30 years. When you've been trading for 30 years, you know what you're doing. Get some go-go juice. So let's look at SLV, because I haven't looked at silver in a little while either. And today's all about commodities. So we're going to look at oil next too. Looks like silver's up a little bit today, just like gold. In fact, it's been trending up since last Friday. It's been on a tear. And it's looking like it wants to go make some highs. And oil, did you guys know that India now is paying like 25% tariffs on Russian oil? So I think they scaled back their oil purchases in India. And if they didn't, what are they doing? They should have. Very interesting. Very interesting. Now, I'm prepared for this, but I'm just curious. Did anybody catch that long this morning on the SPY? I know that's not a commodity. That's not in the realm of what we're talking about today, but that was a nice quick pump there to start the open. I missed that. I was honestly short last night. I was thinking it was going to go down some, and we ended up retracing, sleeping some highs, which normally Fridays, statistically, Monday you pick up your calls, Tuesday you hold them, Wednesday you can consider selling, Thursday sometimes you can be out, but the highest probability for calls to always pay is on Friday. So you pick them up and you sell Friday, it's the highest probability that they're going to pay out. Like if you think the market's going to go short or it's going to go up, if you pick up that direction on Monday, you have the highest probability of making your profits and getting paid out on a Friday. So I didn't think people were really long this week. I mean, I guess Monday, we did set the week up by going higher. So maybe this was to be expected. I'm not sure. Certainly a wild move, in my opinion. But I mean, yesterday we did have a nice move up into close too. So maybe this is just to be expected. But for those of you guys that don't know, Nate's probably going to be putting out his weekend options play. So you guys will want to make sure you're a part of that, because it should be a good one. Good one today. Let's see. Any other commodities you guys can think of? We've gone over oil. We've gone over gold. We've gone over silver. We've gone over soybeans. What else am I missing? Anything? I think that's it. I mean, did you guys see yesterday that Trump signed in that order for crypto and ETF, or people who can use crypto now in their 401ks? I think Jack said that was a bad idea. But yeah, so ES is up 0.5%, acting like it wants to pull back to the 200-day EMA. All my long signals just went away. This could be an interesting day today. AEO, the old American Eagle hot stock, meme stock, down some today. Nothing to be too concerned about there, though. That's gonna behave like GameStop. Hey, good morning, Dennis. So today we have Jeffrey Turnmire and Alex Reid. Those are the three speakers today. Here, let me share these with you guys. Always like to shout them out. So we got Alex, and then we've got Jeffrey. And then we have Jeff. Oh, and by the way, here's Jeffrey's Telegram. Post that in there for you. Jeffrey's Telegram. And then here's Geof Smith. If you guys are new here. What did that just say?
What's up, Blake?
Who we got with us? I can't see my screen. Is that Jeff?
That is.
There we go. How we doing, Jeff?
Good. There's another
That's
Jeff
awesome.
right there.
There is another Jeff. There's Jeffrey Turnmire.
Now it gets real confusing.
Yeah. Well, and I was talking. I was looking for somebody. I just heard a voice. I was like, oh no, who is that? Someone's in here. Well, it's been a good morning. I was looking at gold. It seems like it's up about 1% today.
Yeah, on that tariff news.
Is that what that is from?
Yeah, Trump gonna tariff gold bars 100%.
What?
Yeah, it's the 1 kilo and 100-ounce gold bars. What's crazy is he threw a 35% tariff on Switzerland, and their largest export to the U.S. is what? Gold.
Oh my gosh.
So, yeah, when he threw that out there, gold spiked to, what was it, 34.10?
Oh
When
my
the all-time
gosh.
high, and that didn't last long. It pulled it right back down, and now they kind of celebrate where we closed yesterday. So, but yeah,
Why did he do that?
well, Switzerland.
What are you gonna tariff for Switzerland?
I mean, you already tariffed copper. Why not gold?
Oh my gosh. And
yeah.
silver too, or no?
Hadn't
Not
heard
yet.
the silver part yet.
Not yet. But Mexico's the biggest silver producer, so
That's right.
and South Africa is the biggest platinum producer. So,
Oh my gosh. I guess they're doing cobalt too. All the minerals.
well, we'll see what happens. I mean, this is getting interesting though, because That kind of blows up the hedge trade a little bit.
Oh
Mhm.
man. Well, my first thought was when I saw that, before I even saw what Trump had done, I thought, hey, did the Treasury Department actually revalue their $42 an ounce up to 3,400 or something like that? And I was like, golly. And then I started reading, I was like, oh no, it's just Trump again.
It's just Trump again.
Yeah, it could have
Oh
been
my gosh.
Trump with the Treasury too, though.
Yeah, yeah. But yeah, that
Oh
was my
man.
first thought when I saw that big rally. I was like, man, they revalued the gold at the Treasury.
They went by Fort Knox, and guess what? It was empty.
Yeah.
Oh my.
So, yeah, I mean, there's I guess, new definition of being trumped, huh?
I guess so. Yeah. Getting gold got trumped.
Yeah.
There's Alex. How are we doing this morning?
Hey, what's up? Sorry, I was late. I'm having monitor problems. Now everything's opposite. So to go to the right, to the left monitor, I gotta scroll right. I don't know what's going on, guys.
Oh
Whatever.
my.
I'll survive. I suppose I'll survive. I guess
Yeah.
people have had it harder than this in the past. But
Yeah, they have. Heck, I was trying to stream yesterday, and before I could kick things off, my internet just died. Luckily, Kane
yeah,
was here, so that was good.
yeah, I saw that. Saw it in the channels. Man,
Mhm.
the Russians don't want us to tell you about all these good trading strategies. You, Dakota, everybody's losing their internet this
Mhm.
week. It's crazy.
Yep, we're
Well,
having some issues in the Midwest right now.
I tell you, yesterday somebody hit a transformer on a pole behind the building here. Well, it was crazy. The whole building had no power, but I had lights in my office and one outlet worked.
How does that? How
And I
does
was
that
like,
work? That doesn't
wonder
make
how
any
they
sense.
wired this building.
Yeah, that doesn't make any sense. You're on like another transformer.
Yeah.
You're going. You're that one outlet's going across the town.
Yeah.
Sounds like it took out
Ultimate
two legs
backup.
of the. Sounds like it took out two legs of the three-phase three-phase. So one leg's still
Yeah.
working.
Right. Now I was just like, man, that is just crazy. So, but we stayed up and running.
Heck.
Or I did anyway.
Yeah.
Oh,
Well,
my.
hopefully nobody loses their internet today. Um, I think
Yeah.
we should be good.
I think so. We've got all the problems behind us. It's Friday now, so we're on the up and up. Merleson wants to know, will the tariffs impact gold prices?
Well,
That
hey, Jeff,
already has.
It already has.
Yeah, that's old news now. So I tell you, the tariffs are, they kind of beating up on everything. All of a sudden this week has just turned negative on crude oil. I mean, there's nothing that can help crude at this point in time. Even Mexico approved fracking.
Oh, really?
So they're going to start fracking now. Our
Do they
ex
have a lot of fields? A lot of fracking fields?
Well, yeah, they're right next to the Permian Basin. I mean,
Yeah,
Yeah.
yeah. They're just
there you
south of
go.
the. Yeah.
Yeah. I mean, they've got a lot of oil down there. They just never have approved fracking. So now they have. So here we go.
Start getting
After
some
we
mini
failed to
earthquakes.
After we failed to break out on June 20th, I've been looking for a drop down into the low 50s on oil myself. So
Well, and
that's
I
just
don't disagree with that at all. The problem is there was too much positive in there to make the thing just die off. And
yeah.
I was just
It's
like,
been CL, the chart for everybody to look at on TradingView, CL1 exclamation point is
I'll
the
get
constant
this up.
contract.
Yeah.
It's been sitting right on the May 2023 low
yes.
for weeks. And
Yeah.
that's kind of been the level of support. And right now today we kind of stuck a toe across it and stepped back a little bit. But if we actually push below that low, I believe we're going on down to the low 50s.
What is it?
So,
What's the ticker?
Yeah, Charlie Lima 1 exclamation point. There you go. That's what we're talking about.
Damn.
Probably going down the low 50s.
Yeah. I mean, we're in free fall mode now. Wow.
But right where we are is the low from May of 2023. And that's
Right.
kind of been long-term support right there. We dipped below it in April, May, and kind of beat our head on it. Then we popped back up through on that war news in June, and then now we're right back to it.
So now if they just died, made me happy.
Yeah. Wow.
I've got shares of SCO looking for the drop down to the low 50s, and then I'll be bullish on oil probably from there.
Yeah.
SEO
Yeah,
leverage.
that goes up when oil goes down, and shares are the way to play. Everyone wants to know what options. Don't play options on leverage.
Yeah.
Just put
Leverage on leverage on leverage. They're also not. There are some that are kind of well, they they have a lot of volume, but a lot of them don't even. They're kind of thinly traded on the options market, so it's even worse.
Yeah, and if you'd rather play options, just go to USO and buy some puts. That'd probably be the easiest way. Jeff has probably got a few ways to play, but
Oh yeah, and they're dirt cheap too. You can do at the money options on USO and it doesn't cost you hardly anything.
there you go. Jeff agrees.
Yeah. That's the thing about USO that's so nice. I mean, heck, you can go 1 month out and it might cost you $1. So, but I do
There you
think
go.
that I've been hoping and waiting for crude oil to, crumple and die, but it just hasn't had the time to do it yet. So,
Yeah, so you might have to fly out to maybe October, November, December if you wanted
yeah.
to play and wait for this move, because it seems to be just like watching pudding crawl down the street or something like that. Just slow.
So what's your price target for this, Jeffrey, or what are you doing? When did you get into this?
I'm looking for a new low. For SEO, I'm looking for a move up to the 22, 23 area.
Yeah.
For oil itself, looking for a new low in the 50s. I'm kind of basing my move off the oil chart, not off the SCO chart. So it's kind of one of those, like, when you start playing with a derivative of a derivative, a leverage derivative, they don't always follow the same path as the actual underlying, oil being the underlying. And I just go to the futures chart because that's what the world plays with. They don't play with US oil fund. They don't play with whatever. They play with the actual futures chart. And, you can compare and contrast that with the European oil chart,
What was that, Brent?
yeah, it's Brent. You know the ticker for that one?
No, I don't. What is it? Brent crude oil?
Just BRN, one X, Bravo, Romeo, November, one exclamation point.
Oh.
There you go. So slightly different prices here, but same basic chart pattern. Same basic chart pattern.
Interesting.
Yeah, there's always a premium between Brent and West Texas.
Euro's got all those extra taxes.
Yeah.
Sure. So same. So I guess there's probably 2023 lows on this one back here.
Not quite. That's the thing. We're already way lower than the 2023 low on Brent. It's kind of interesting. Brent, though, looks like it's bottoming out more confidently than West Texas Intermediate or CL.
What's the difference in these two? I mean, is it like European oil futures basically, like what's being consumed in Europe versus America for WTI or something, or what?
It's delivery. We've got Cushing, Oklahoma for CL, and I think London for Brent.
Right.
So like what's being delivered in Europe?
It's the delivery point, and the differences in demand in those two delivery points.
How could you be long Europe? How could you be long European oil? I mean, they have no industry. They're deindustrializing. They don't use AC. And what do they need oil for? I don't know.
And they run on diesel trucks. I mean, they don't have electric trucks everywhere yet. It's all their trucking is all diesel. So
that's true. That's true. Interesting. Very interesting.
And they still use heating oil.
And they still fly jets everywhere. So
yeah,
they do well. Hey, they are up in their military budget, so all those military tanks and planes and everything and transportation logistics will require oil. So maybe could be a bullish move for it.
I think CL, Brent and West Texas Intermediate tend to fly pretty much in parallel. They're formation fly, even though they're not exactly the same pattern. So we'll probably see these two drop together. If one's going to drop out, the other's going to drop out. So we'll probably see this move down in there. And then like I said, if CL can hit the low 50s, maybe even 50 even, That could, I've speculated that it could be the spark catalyst for another hot war in the Middle East. Like another, the Middle East runs on oil money. If they're jammed up short on money, they may start shooting rockets just to try to get oil prices back higher. I wouldn't put it past them. Wouldn't put it past them. I mean,
that's why it's a crazy market. It's so tied up in geopolitics, man. It's crazy. It's also like oil goes down, the companies themselves, like Exxon, make less money, but oil going down is good for the economy. So politicians want it to go down, but then it's also bad for OPEC if it goes down. So they want to make it higher, but then that's bad for the economy. I don't know. It's crazy.
Well, another thing that you run into is the cost of production. And the Permian Basin is the cheapest in the United States. It's about $41, $42 cost of production. If you go across the Anadarko and stuff like that, up around Colorado and everything like that, cost of production is right around 49 to $50. So between 50 and $40 is a real big critical area for oil companies, because do they make money or do they lose money? And so once you start hitting 40 to $50, you're going to have a fight right there. I mean, kind of like in the Middle East, you get crude oil down to $50, they're going to shoot rockets. Well, the US guys don't want it down there either because they start losing money. So you got both places saying, hey, I don't want this below there. And as long as we stay above $60, everybody's making money. Even frackers make money off that. But once you start getting below there, I mean, now you're starting to play with pocketbooks of the big guys, and they're not going to like that a bit.
What do you think about abiogenesis, Jeff?
What's that?
Abiogenesis. You ever heard of that? Or Jeffrey also? That oil is not actually a fossil fuel.
no,
Well, now hold on. I mean, that term fossil fuel, okay, yeah, it's old, fine. But all fossil fuels are renewable fuels, period. I mean, I don't care I mean, natural gas is just the fumes off of crude oil, is all it is. You can cap a natural gas well, come back in 5 years and you'll get a ton of natural gas off of it again. It's that simple. Crude oil takes a little longer. You can cap an oil well in about 25 to 30 years, you can start pulling oil out of it again. It's all renewable. I mean, it's not like the whole ecological system has just shut down, right? I mean, you still have decomposition and everything like that, which generates what we get out of crude oil. So it's all renewable oil, gas, whatever you want to call it. It's all renewable. It just takes a little longer. I mean, you don't have the sun shining every day. You don't have, I mean, crude oil's bubbling every day. It's boiling. I mean, and natural gas is fuming off of it every day. It just takes a little longer to be able to pull large amounts out. So, I mean, for them to say it's not renewable, it is. We got more natural gas and crude oil we can shake, the Amazon forest at, and we'll still have crude and gasoline, I mean, gas for thousands of years.
And I've seen some research that some geologists are finding crude oil pockets in places where plant and animal material isn't. So there's also, as you're alluding to, Alex, some sort of other mechanism creating pockets of crude oil in our Earth's crust that we don't necessarily fully understand. So
yeah, look at the Arabian Desert. Not a lot living out there.
No, dude. Yeah. Well, the thing is like, it's not dinosaur bones, folks, that's creating oil.
Yeah, that was actually a story spun up by like Sinclair Oil and the people that ran those to help create demand and give it a reason why you should buy it. And it was a story, a captivating story. And it's not necessarily based in truth or actual geology or science.
No, not at all. But interesting diversion there. I just was curious. So yeah, yeah. So the lie, so not lies. Well, maybe actually lies, but the myth at least is about fossil fuels. Fossil fuels, right? They're myths. It's not how it is, how it works. There's not. You're not pumping some old T-Rex matter into your car at the pump station.
Yeah, they are hydrocarbons, and I think it's easy for people to jump there because coal, a lot of times you have fossils when you're mining coal. You find fossils, and that is decayed, compressed plant matter, and
Carbon, yeah.
and but then it's easy for people to make that association from coal to oil, both black, both energy dense, but it's the oil is hydrocarbons. It's not necessarily like the decomposed coal and fossils. So
Yeah.
it's a different thing.
Yeah.
Totally.
Yeah, you're right though, Bodine. It is funny that Sinclair's mascot logo is the big green brontosaurus dinosaur. That is pretty funny. So I wanted to get your opinion. So I wanted to tell everybody about a trade. So basically that MSTR trade that we took on, if folks were here yesterday, we're still in it. Nothing updated right there. As you probably noticed, it's been pretty volatile, but we're still going to stay in it until next week at least. And did anybody get in on that nice 30% gain on that options flow for run in the chat? Nice, Doug. Did you get that? Let me know what you did, Doug. How you did on that. There's another one though, Jeffrey. And Jeff. I want to get y'all's opinion on. So I'm going to run people through what I did for this trade. Well, kind of in process right now. But so basically Oscar, right? It's this AI health company.
Oh yeah, I saw a whole thread on these AI companies that are integrating AI into healthcare and let me pull it up real quick while you're talking about it. Go ahead. I didn't mean to interrupt you, but let me
so
pull
you're
this
gonna
up.
like this, Jeffrey. As you can see, the Fibonacci levels.
Yeah.
So what I like about this is we are beaten down on this stock, right? We're beaten down. We did find a double bottom here, basically at 1290. Now I do so I'm in the process of thinking through what I want to do with this trade. I took one part of it, so I sold a put at $15 naked put because I wouldn't mind now that we are breaking above this Fibonacci zone. We're above the moving averages. I wouldn't actually mind owning it at 15, which is slightly off of this zone right here, of this little of resistance line. So I sold that. I got about I just did it before we got on here. Hold on a second. Let me go and see what I got for it. I got about $1.31 in premium. So that's on expiring on the 19th of September. So you could have gotten a little less and not been assigned, but I don't, like I said, I'm long this. My idea is I want to, I might just buy 100 shares of this anyways, and just because I want to sell covered calls on it too, and then be long on it. But I like this. I like the beaten down structure of the stock. So what's cool about Oscar? So you can see that they've missed earnings, right? But their free cash flow. I have to get if Jeffrey, while you're talking about the AI stuff and giving maybe your opinion on this trade too, I'd love to hear it. I might look up the free cash flow jumped a lot. And I was reading this study last week about how if you look at like the really big stocks that just win over the long term, like it really just comes down to free cash flow. Like that's like the number one most important metrics, just how much cash they have on hand. I mean, you can see some companies like Apple, right, kind of prove that point because they're just a free cash flow beast. They always have cash reserves. So Oscar actually really increased its free cash flow this last quarter, even though the expectations kind of missed. The fact that it's beaten down, I like it. So that's why I sold a put. I'm willing. I might even buy it at this level and then just pick up another 100 shares if I do get assigned at 15. But at least I'm going to collect some premium. Maybe it'll dip a little bit, but I do think long term we have this nice little zone setting up on the Fibonacci. Plus we have it crossing over the moving averages. So I'm bullish. What do you think, guys?
I mean, they're growing gross profit. They're in an interesting niche kind of market using AI to determine healthcare premiums, and it's interesting. Like they've got revenue growing, consistent revenue grower. Their revenue growth percentage has been declining slightly, so they're not accelerating. They're actually kind of slowing down slightly, but that can turn around pretty quickly. Gross profit still climbing. Gross profit margin is just kind of hanging in. They're able to maintain that pretty well year over year. Their EBITDA is kind of choppy around 0, not really making much money at this point, but growth company, pretty good. Net income for 2025, they're showing a potential just maybe squeaking out barely break even, possibly into 26. We'll see. And net income margin just kind of hanging around 0. So,
What's the free
fundamentally
cash flow?
wise, I don't see. Let me see if I can find the free cash flow.
For some reason, free cash flow is like the hardest metric to poke around and find.
I find the free cash flow on at 747 million.
Yeah, I was trying to look at the trend here. They've got the enterprise value just kind of 0. Cash flow from operations is actually declining slightly. And let's see.
It might have. What do you see the past one on there, Jeff? Or like any trend?
If I can get that.
What I like about this stock too, ladies and gentlemen, is if you've been hanging around looking at these markets, you're looking at Jack, who's been on here, is talking about selling puts, selling naked puts and stuff, trying to pick up shares in Avgo, or these are like, right, a lot of stocks are really expensive. So if you want to sell puts on Apple, you're going to be paying like 22K if you do get assigned. So what I like about
price to sales is going up pretty nice.
Oh, really?
It's kind of dipped down a little bit, but still, I mean, you got 1, 2. Well, I don't know. That just did. I went the other direction. Okay, so they flipped this around. So 56 to 38, or 56 to 36. So it's gone down on the price to sales,
which is a little bit undervalued to its peers.
Yeah.
That's why, but that's I mean, look, this is it's hard to find companies right now that are setting up that are both cheap and are not way just in a huge way above like even just the 9 moving average. So that's why I like this one. I think it's a little undervalued to its peers. I had to pull out the free cash. I did find it. It took a while. I did find the free cash flow. It is increasing. I'll try to see if I can find it. Well, maybe you guys are talking about your stuff, but yeah, I don't know. That's what I'm doing. We'll see if it works out. Maybe not. Maybe it won't. But
yeah, I mean, I kind of hit upon this when I was looking up AI stuff this morning. I kind of troll the message boards and social media in the mornings looking for just new ideas I hadn't thought of, and this came up on the list this morning, and I was trying to pull up. Let's see, I think I posted it to myself. So I've got a whole set of them here I can share on my view if I can figure out where it just went. Just threw it out to its own tab and it
Greg is
disappeared.
saying that the CEO is from Aetna, and he killed it there. That's cool.
There we go.
What's Aetna's ticker? Let's see.
ATNA?
ATNA.
I think. It's hard to remember them all.
Come on, man.
Here's the list on my screen, like just my camera view here. ONDS REAX is applying AI to real estate. Dave applying some AI to person to lending, but they have a cap of $500 per loan. VHI.to. And Alex, you'll like this one. GAMB is in the gambler space.
We might have been reading some of the same stuff this morning because I was putting very similar list.
And then TMDX, ZETA, Lemonade, LMND, and then Root, ROOT, and Oscar down there, and PGY. And there's a number, just top 11. I can write them out for people in the chat. These are interesting ones, up and coming. A lot of them using AI to try to offset normal risk, business decision type stuff for these companies. And it's just kind of an interesting, these are all like less than $5 billion companies that could easily 10x to $50 billion companies. And it's just kind of an interesting place to look for opportunity.
Yeah, let's get that listed. Because I want to keep that. I saw the list. I didn't write anything down, but I did remember Zeta, GAMB, GAMB, and Oscar, right?
Yeah, let me throw these in the chat for everybody.
Gambling though is like I looked at this one and I was just like, man, this is this thing is ugly. But look,
PGY needs to pull back.
what do you say?
The PGY needs to pull back.
Yeah, right. PGY is another. You said that's a ticker, right?
Yeah, PGY was on the list there. Yeah.
Yeah. So I saw actually this is pretty interesting. We did not do this. I did see some significant put volume flowing in like 3 days ago. We should have taken it. Would have been nice, but we didn't because I didn't want to do earnings. But
I'm not saying anybody should buy any of these right now. They're just interesting to look at for opportunities on pullbacks.
Yeah, I can't find Aetna either. I don't know if it did get bought out or something. Bodine. I can't. You usually can just type in the name of the company and it'll come up if you don't know the ticker, but that's not happening for me. So I don't know what happened there.
Here we go. Sorry about that.
I like it. I like it. I'm gonna write these down just for my own self. Actually, we can go through and look at some of these too, and just see which ones look solid. Let me just write these down.
Yahoo Finance says Aetna is AET.
Bodine said he could not find it. Let's see. Bodine. No. It must have changed. It must have been taken over or went private or something.
Yeah.
I don't
not
find
sure.
it.
Let me dive in here.
I've never seen it on any scanner now that I'm thinking about it. Like, it's never come up or anything. I've never like seen it around or anything. So never seen an earnings on it either.
Aetna was acquired by CVS Health in 2018.
That's right.
Yeah. There you go.
Yeah.
So it's CVS. That's the sticker.
Yeah.
CVS.
Charlie Victor Sierra.
CVS is not doing as good as I thought it was. Anyway, let's look at CVS real quick and then let's get back to these. Yeah. I mean,
Yeah, I wouldn't touch CVS.
No, I don't like. What is this? This is a huge range of nothing. It's not even like a tight range of nothing.
Yeah. It's just an awful stock.
Yeah.
It's working on having made the bottom there at the beginning of the year. It's working on it. It's still got some stuff to work through, like quite a bit of stuff when you zoom out and look at the last 5 years.
Oh yeah.
Wow, yeah. Dude, that's crazy.
Yeah, when I think about CVS, I just think of Rite Aid.
Does Rite Aid still exist? I haven't seen it.
It does actually.
Okay. I never liked Rite Aid.
Yeah.
But if you look at the WBA Walgreens Boots Alliance chart, that looks pretty bad too. So
yeah, these ones they tried to make that push into primary care, I think, and I don't think it worked out that great. Though we are in a nice little, it's kind of a trend, but it's like a weird one.
Yeah, I don't know. That looks dangerous with that big high we had right at the beginning of the year.
Yeah, and just like
there's no volume in it.
No, I mean you can kind of see that, like a lot of, kind of some volume maybe coming up. I don't, here, just the big candlesticks, and then kind of just like a slow, like tiny little moves up, like a weird comparison of price action.
So Citigroup has been hired to facilitate taking Walgreens Boots Alliance private. So that's kind of like the non-interest in that trading that stock is the fact it's going to go private, and you may or may not get paid for your risk.
That's right. I remember that. I remember reading about that now that you mention it. Yeah. Okay. So let's look. So so Roots was interesting. When I was looking at this, so basically they put a sensor in your car. Does anybody have like one of those sensors they put in their car? And I don't use one because I think it's really panopticon-ish, but if you brake well enough, they'll like decrease your insurance by like 7 cents a month or something. So, but anyways, that's kind of like Roots idea what I was reading about. And you just put a sensor in your car, and then they actually tailor so if you pay for insurance, if you pay like your policy, right, you have, maybe you drive 500 miles a month. Maybe you drive 20. You're still basically paying, the same amount of coverage. So Reid is trying to do sort of AI tailored, more bespoke coverage policies based on how much you drive and whatnot.
And it sounds a lot like what Progressive was trying to do, where you basically how far do you drive and how risky do you drive, and combining that together to provide their actual risk. Whereas Progressive probably uses more traditional actuary tables. Root is trying to put AI into the game. So this sounds a lot like the Tesla insurance, that for those that have Tesla and the few states out there that allow Tesla to have insurance in their state. They monitor how you drive, how you operate the Tesla, and then provide you insurance based on that. You have kind of a score. And funny enough, if you let the thing self-drive itself, you always have a perfect score. So
Oh, nice. So I didn't know that was a thing. People won't insure, certain states won't insure Teslas.
they have high premiums in certain states, and Tesla has insurance in some states, but not all states.
Interesting. Hal here saying he has one. He won't let you do over 80 miles an hour in your state.
That's probably if he's got Tesla insurance, you can't go over 80 where you get dinged for it.
Interesting. Blake, and someone else who asked Blake, Oscar is that ticker that we sold that naked put on. Now, folks, if you sell a naked put, I'm willing to be assigned shares of Oscar at $15. So,
and that's bullish. That's not shorting the stock.
Right. Yeah. I want to be assigned shares because I think that it has some growth potential, and I'm willing to get in for a little lower. If I don't get that's September 19th. So I might even just buy it, now, and if it goes down, I'll kind of mitigate my cost basis, between what I buy maybe on Monday or something versus if I were to get assigned shares at 15 down the road. But I do want to, because I want to be in it for for the bull run if it happens, which I think it could. We'll see. And also, man, it's like, so it's it's $15. So if you're going to be paying $1,500 to get 100 shares, right? And then you can sell. So it's not like you're trying to buy Apple and you have to pay 20 grand. You're paying $15, and you can and the premiums are kind of juicy on Oscar actually. What is it?
Just out to September, the at the money is running around $1.50 roughly.
Right. Yeah. So you can do, if you sell covered calls on that, if you can
That's
just
that's like 10%.
It's great. It's good. So you're getting in at 15. You're getting in at, this is why I like the Oscar trade. Multiple ways to win. One, you can sell premium right off. You can sell puts right off the bat. Collect that. Get assigned at a price that you're willing to go to. If you get in at the price, then you're bullish on the stock, so you can get that stock appreciation. You can sell covered calls on it along the way, and it's just, I don't know. And then if it, I like it. And then it's also cheap. So it's $15. So I think right now, especially, you have the cheap stocks. And this is another reason why Lemonade is, Oscar's not unvolatile either, but Lemonade, it's been kind of a weird one, so.
Yeah, it's been down to 20 and been up to 54. It's quite a range. Oscar, as you said, not unvolatile either. It's been down to 11 and up to 24, kind of the same range percent wise, just a different set of numbers.
And it's also a different chart setup. Lemonade, do I think that Lemonade, due to its volatility, could go up more? It could. I think it's probably going to dip down first, though, just based on what's been happening. I don't know if it's going to climb up. We seem to be hitting kind of like a double top here, so we'll see what happens on that. But you go look at Oscar, and I think it's more of you're getting in more of at a beaten down point. Now, if you got in at Lemonade earlier, it kind of would have been a very different, similar more similar chart to this Oscar chart. But
that's what I was saying. Most of these that I put on the list, you need a pullback of some sort before you really go in with any meaningful. Maybe you dip your toe in now, but you should really be looking for an opportunity for it to come back to a support level And if you don't understand support levels and stuff like that, it's basically where price has come down to multiple times on the chart. That's more than likely a support level. It's like if I was looking at Oscar right here, you can see it is found lows right around that 12, 13 area many times in the last 2 years. So that'd
I mean,
be
yeah, usually like I would look, it would be great if I had a third bounce off like in more recent times, but if you go back, I mean, you do see like right here, like you do like look, 1, 2, 1, 2, little consolidation around there, 3, 4, like you were saying, kind of bounced over this and then soared. But yeah, this zone is sort of seems to be a support line for it.
So that's also a warning point. You can set an alert on your chart. If we get down below 12, maybe in the 11 area, maybe you want to consider like either that's another add point or a bail point. It depends on you and your risk and your account. I can't say what's right for you and your account. If Oscar Health pulls out this AI thing and becomes popular, I mean, the sky's the limit. UNH, Aetna, Cigna, Blue Cross Blue Shield, I mean, they can take on all of them or be acquired, so it's an interesting space.
That actually is a really interesting point with these AI based health tech companies. Like they probably will just be acquired, maybe. A few of them will be at least.
Especially if they have solid tech and it actually provides meaningful value to the company, then somebody like Blue Cross could buy them up and roll it out and provide value for their customers, but also value for their company. And that's just a win-win for a big company like that has some ability to acquire something.
Yeah, no, that's actually a good point. Didn't even think about that. That's nice. So anyways, yeah, folks, that's what we're doing with we're at least what I'm doing with Oscar. I don't know, I'm not gonna speak for anybody else, but
Isn't Blue Cross private?
Yeah, I was just throwing it like Blue Cross is, UNH more nationwide, Cigna more nationwide.
That's how UNH get back. It'll just acquire all these companies, and
Blue Cross is kind of a private franchise type model per state. So it's there's difference in all of it, but I'm just throwing out one Blue Cross. I mean, it's like that's a popular one around here. Some states have Blue Cross, some states don't.
Blue Cross.
The whole Southeast has Blue Cross.
Yeah, I mean the government does Blue Cross. I think. Let me check. My wife works for the government.
Healthcare is an interesting, like health insurance is weird because it's regulated on a statewide basis, so you don't really have a national healthcare plan except for like the government plans. So
no, it looks like I have some, actually, but we have had Blue Cross Blue Shield in the past. It just depends.
A lot of military folk have TRICARE nationwide, but you kind of have to go to a VA hospital to be able to cash in on that.
Yeah. Man, okay, cool. So we got that. I saw some questions about some of the trades we have on. I'll be updating it in the Telegram channels. Roots, we closed out Root yesterday though, I believe. Richie. So
Root can take a dive back down, like volatility that can take a dive right on back down to the 60s.
Yeah, it's funny. I didn't even really know what it was until this morning. That's like an unusual flow app on Root come in, and I guess we got it. I need to go check. We have so many of those trades every day. I gotta remember what happened. But yeah, so what else are you looking at? What else are you looking at, guys? Jeff, you got any commodity stuff, any more commodity stuff? Like I think people were asking about the long-term outlook on gold, right? We can just pull that up. Actually, you want to pull up your chart and show them? I'm gonna go look one thing for some of the people that are asking.
Well, I mean, honestly, I think gold is going to continue to move up. I don't think it's going to do what Schiff says and go up to 100,000 an ounce, but
has Schiff ever been right about anything?
No. So, but if he goes 10% of that way, I'd be happy. So
yeah.
/GC.
Yeah, I warned my followers this morning to be very cautious over the next few weeks with this. I'm sure the buy gold commercials are going to ramp up and try to sow all this fear with these tariffs and stuff like that. Buy your gold now, and panic buying is never usually a great thing to do. So I'm just throwing that out there.
Yeah.
Yeah, hold on a second. There we go. So, oh, I guess I got to click the share button, don't I? So,
That usually works better.
yeah. So yeah, this is gold itself. I mean, you can kind of see here, this is where we popped up last night. In fact, if you look at just what we did, they were kind of rallying this thing into the close yesterday. And then right at the open, this is at 6 p.m. Eastern time, they opened it and they spiked it up. And then they kind of settled out. And then they started kind of moving back up again. And I was just like, maybe this thing is real. And that's what I just got to thinking, hey, they, revalued our treasury from $42 up to, 3,400 or whatever it is. And then I found out it was actually tariffs. So, but now they've just been kind of hanging out here. The one thing that's kind of interesting, though, they're really kind of staying above the previous day's close. So they're not really just dumping this thing, they're just kind of reconsolidating it a little bit. The problem with gold is, and you can just go back and look at it, every time it makes a new all-time high, they have a tendency of dumping it off about $200. So beware. I'm just gonna throw that out there. It wouldn't surprise me if we don't go back down and visit, 3,300 after them doing this. But this was all news. This wasn't them just piling it up and going. And so they spiked this thing up. So it might be able to hold up here a little bit. It really needs to get back above, I'll say 35.10, because it had a previous high up there at 35.08, no, 35.0910. So if we can get above 35.10, I think this thing will probably move back up and probably try to retest that high. But I'd like to have silver helping it out. I mean, at least silver got back above, $38. But it came just shy of $40, a week or so ago. And I think that if we can get, silver back above 40, I think you'll have gold kind of moving up. Copper was kind of leading everything until they threw the tariffs on it, and they dumped it off 25%. But a lot of people thought,
platinum's been the big winner this year, if you really look at it.
I'm not going to disagree with that. Yeah, platinum's been doing really, really well. Even palladium has been kind of following along with it.
Oh, what's palladium's ticker?
So you got
PA, one exclamation point.
PA is what it is. PA and PL. And the thing that this is one of those irritating things that gets under my skin a little bit. So if I'll just pull it up here. This is the ETF on platinum or palladium PAL.
PAL, yeah.
Yeah, there's no options on it. So if you're an options trader and you want to do options on palladium, PAL's it, and you don't get to do options on it. There it is. And of course, that's a 30-minute chart. Here we go. Let's go over to a daily. But that's the one thing is there's no options on this thing. So you're either buying the stock or you're not. I mean, you don't have to buy 100 shares. You can buy 1 share or 3 shares and 5 shares, whatever it is. But that's that one. Of course, I usually just trade GLD or SLV and kind of go from there. Problem with silver is it moves very, very slowly. Percent wise, based off of gold, it moves percent wise pretty well. But as far as just jumping into SLV and saying giddy up, it's just a real slow mover. So you have to kind of be aware of that. It's almost better to buy like Newmont or AEM or whatever it is. Wheat and precious metals, something like that, and you'll get a better
AEM has been a real performer compared to almost any other gold miner. NEM still well below the highs that it set back in 2022.
Yeah,
and even Barrick has been pretty beat down. And
this is Newmont right here, and it's been in cruise mode.
Oh yeah, wow.
Yeah,
they had great earnings too. They did a little dip, but then just bounced.
Yeah. And it wouldn't surprise me over a longer term period if this thing doesn't try to get up to about $95-$100. So, and after that,
Barrick's still beat down too.
Was it?
It's AEM's just smoking them all.
Yeah.
AEM, that's American Eagle Gold.
Yeah, there's American Eagle. Looks pretty much like Newmont.
Agnico Eagles. Okay.
Yeah.
Yeah,
Oh,
AEM and Newmont look similar, except Newmont has this high hanging out there from 22 that's way up there that it's probably not going to break through, where AEM is just kind of rocking and rolling higher. So,
yeah. Newmont's about half, or not a little less than half the cost, a little more than half the cost, rather.
yeah, if you're looking at it on a per share basis, you have to, should really look at the, the company valuation and whether they can double it or, triple it. And that's where the real opportunity is. Like you look at AEM is a $500 million company, whereas NEM is a 1.1 billion. So it takes a lot more money to double $1 billion than it does something
Yeah.
that's, half that.
Yeah, how do these companies, yeah, it's interesting, these gold companies, how do they increase their valuation? Is it, I mean, I know it's new mines, but I mean, I think what's the exploration? Are they opening a lot of new exploration mines, or is it just really tied to the price of gold in a big way?
Well, you got to
Justin.
sell it to make money, right? So, and that's the problem. The thing is how much, I mean, you're getting into mining here, how much of the actual gold is in per ton of rock. And, you have to, a lot of people dig into all of that, especially when they get into, this mine or that mine and how long is the vein? I mean, and, how many mines do they have on that one vein?
And
And
what's the proven reserve
yeah,
is a big metric. How much gold do they think is there? How much have they proved is there?
right.
What's going to be the cost to extract that gold out of the ground and get it to the market? It's cost of goods sold basically, and is that profitable or is it not at the current? And fuel prices play into this pretty big for big mining. So a swing in oil prices can swing the valuation of their gold pretty hugely.
Yep.
So,
Yep. Now, if you really want to make them mad, just pour a bunch of mercury in there and see what happens with the gold.
sucks that gold
Bro,
right up.
bro, alchemy is real. You actually you can convert mercury to gold. It's been done. Folks. Alchemy is real. However, it's very expensive. So
Oh, but
Anyway,
yeah,
I
I
see
think
platinum.
mean overall,
Jeff, PPLT is Platinum's ETF, and funny enough, it's
there
done
it
by
is.
the same people as PAL. This one does have options, and I can make the chart case for this going to 160.
which one is this? What's the ticker?
It's
PPLT.
PPLT, Platinum
It's on the screen right
on
now.
the screen.
Oh, sorry.
PPLT. And I can make the case for this going to 160. I don't know about you, Jeff, but I'm
Oh,
kind of
yeah.
bullish on Platinum.
Yep. Yeah. And it looks like silver.
Very similar to the silver chart, and I think Platinum has got some legs to go. It has
I like the
been
support here on the
it's
50.
kind of like a beach ball that's been held underwater for a while too, kind of like silver. So
Yeah.
I do expect silver to maybe outperform Platinum, but I do see the opportunity for this to go to 160.
Yeah.
I'm trying to see what's the how is the options trading volume?
So let's go
And it's
find
not
out.
great. It's
No.
not going to be great.
No, it's not great. But it's there. I don't know. There's hardly any you'd have to go. I mean, there's a little bit of volume out on the OTM side. Not
Yeah, I'm
much.
holding. Like I said, I expect silver to maybe outperform. So I've got AGQ, which is a leveraged silver ETF. So you go to the mains, gold, silver. You've got more to play with, more tickers, more things involved. So that's why a lot of people stay in that arena.
Very interesting. Okay.
Kind of interesting. The 2026 leaps up around 170, 175. You actually have a lot of open interest.
Oh, on
see, somebody's been listening to me.
Yeah. Interesting. Very cool. I like how all the AGQ for Jeffrey. We do have that a nice little crossover, bounce off the 50, crossover. Now we're crossing over like the 9 and the 20.
Yeah, it's got some upside potential here. I could see that one at 100 to 105.
Well, you're
is my
still off
current
of
target.
all-time highs too, so you have some previous tests of a higher amount.
Yeah, even though this is back to this is a leverage instrument, derivative of a derivative, I could make the case for AGQ going up to like 105, maybe even higher. So
105 would put it.
that's almost a double from where we are.
Yeah, okay, yeah, that's okay. I was going back. Yeah, that's far above it's all-time highs. Wow, okay, nice.
I
Yeah,
do hold that one. I hold that one myself.
right. I mean, gold, I mean, they just go up, right? Basically, the same. Silver's the same, but I guess these leverage ETFs don't
It's not
necessarily.
perfect. Jeff
Just
can get
go
into
up.
finer points. It's not perfectly the same. They kind of run on their own. They fly in the same formation, but they don't necessarily move the same ways.
Yeah.
Yeah, usually in big up moves, and this is where Jeffrey was saying it's kind of like the beach ball being held underwater. Usually in these big up moves, I mean, you think about what silver's done, it's moved from, basically 28, 29 bucks up to 37, $38. Percent wise, it has outperformed gold, period. However, if you're looking for dollars, gold's actually made you a whole lot more dollars in that same amount of move. So that's the one reason why I don't like, talking about percent. Hey, I made, 50% on this stock. Well, yeah, but you went from $10 to $12, I mean, to 15 bucks. Okay, there it is, right? Well, when I'm looking at $100, well, I got 50 bucks out of that one.
Right.
And so you really have to be real careful when somebody says, "Hey, I made, 138% on this stock." Well, yeah, but it was $4 when you bought it. I mean, okay, I get that. And that's the one thing you really have to be careful of. That's the one thing I don't like about the percent gainers and percent losers that they, spit out on the NASDAQ and stuff, because they're all penny stocks.
Right.
And you're just like, okay, fine, whatever.
Yeah.
So, but yeah, I always just like to say, hey, this thing's moved from 47 to 53. That's a decent move in a $47 stock. So, but yeah, you have to be real careful on the percent wise. But when you look at silver and gold in bull markets or even bear markets, you'll usually see silver outperform gold. I mean, you think about what happened, to silver. It went up there and hit $49.85 and dropped clear down to 11 bucks. I mean, there's you a correction in the market.
Yeah.
You said that wasn't a structure. That wasn't like a structural issue with silver, right? That was because of the wonkiness with the futures contracts.
Well, yeah. I mean, when we hit $42, they raised margins. When they got down to 37 or 36 or whatever, they raised margins again. And so a lot of people had to bail out of those futures contracts. But after that, they haven't necessarily raised margin on them, and they just went ahead and just dumped it off anyway. Where gold, it had a high of like, what was it, 1280 or something like that. It went back and tested 1050. So, okay, it dropped a couple of $100, but nothing like silver.
Yeah.
Yeah,
So,
silver's basically corrected almost 75% or whatever,
yeah,
um,
yeah,
80%. And it met its high in 2011, and then it met its low in 2020, right around COVID. And now we haven't even broken a new high. Like, gold, we're way up there past
yeah,
all-time highs.
right.
Silver's still that beach ball that's being held under the all-time high price, and it has that potential to pop on up in the 50, $60 area,
Yep,
is kind of the way I see it right now. If it's going to catch up and make the chart look similar to gold.
absolutely. Absolutely.
So you guys might not know it, but not only is Jeffrey, I'm not sorry, Jeffrey and sorry, it's confusing. Um, but you both are so great. Not only is Jeff a commodities expert, but he's also pretty good day trader too.
Yeah, actually started off day trading.
Yeah.
I mean, and really kind of interesting. I guess a lot of things that I've done in life, there we go. I do it backwards to everybody else. Everybody starts with the easy stuff and goes to the hard stuff. I always start with the hard stuff and go to the easy stuff. And I don't know why I've done that, just because it's like, hey, that looks really cool.
Yeah.
And I start doing it that way, and I find out, well, that was the most difficult thing you could have done. You should have done this first. Um, so yeah, when I started turning pins and bowls and stuff like that, man, I was doing all kinds of acrylics and putting metal in it and everything like this, and come to find out, man, that was like way advanced, but I just thought it looked cool. There it is. And
There you go.
so, um, but anyway, but yeah, and in fact, the same thing. I started day trading futures, um, just because there was no pattern day trading rule. Of course, back in the 90s, who cares? There wasn't any day trading rules then anyway. But
Oh,
I
what a
started,
time to be alive. I wish.
yeah.
Well, I was alive, but I wasn't day trading.
But I started trading futures and just started day trading futures. One thing I found out was, I mean, if you think about, the indexes as a family, you have the S&P 500, there's, the big dog, there's dad. Then you got the Dow, who's been around just as long as, the big dog, but it's a little smaller, so there's mom. And then you got the teenager, and he showed up around the 1960s, 1970s, and it's the old NASDAQ. And of course, the Nasdaq, and it acts like a teenager. There are times where everybody wants to go to grandma's house, but he wants to stay home and play video games, and so there's a big fight between them. And so, but when everybody wants to go to grandma's house, then everybody does a wonderful thing. And but that's where all the traders are. You don't hear people day trading Disney and Walmart and everything like that. You hear them day trading Apple and Amazon and all those things. So all the traders are in the Nasdaq, where all the investments in the other ones. So you're going to get a more of a uh, I'll say more volatile moves out of the Nasdaq, just because that's where the traders are. And of course, now you got all the algos and the bots and everything like that that are in there. And so what I found, I mean, I started trading the Nasdaq. No, the Nasdaq, back when I started trading it, we didn't have the range that we have now. I mean, by any means. I mean, the heck, the S&P was at somewhere between 900 and 1200 on the S&P. So that kind of tells you, hey, we're a lot lower. I mean, a 20 point, 30 point move in the Nasdaq was a huge move in a day. So, and that's where I started, learning how to day trade it. Well, now things have gotten a whole lot more volatile, and so when you have something more volatile, instead of having to worry about the Nasdaq moving 100 or 200 points in 30 minutes, you can trade the QQQ and get around that, and that's what's really cool. So, and a lot of people like trading the QQQ or the SPY or something like that, but I've actually developed a trade, and I can tell you about that just a little bit.